Today I'm going to have a demo for the fixed assets module within NetSuite. In this demo, we're going to be using the AMP demo account since they have fixed assets. So the first thing to notice is we have to go to fixed assets and then setup, and we want to look at the asset types. In this case, there's only 3 types: furniture, fixtures, IT equipment, and leasehold improvements. The asset type is going to drive a lot of the information on the fixed assets. So I'm just going to go and view the furniture and fixtures type, just really to show you all of the different information and kind of how it all lays out within NetSuite. So the name and description is just going to be what it's going to be called and what it's for. But the first thing that really sticks out is the accounting method. This is going to be what kind of depreciation that is going to basically how the asset is going to depreciate over the life is going to be chosen by this accounting method. Then the residual percentage here is going to be how much percent of the asset's total value is going to be left over at the end of the time period. And then the asset lifetime is in months, how long the asset is alive. So when you create the asset and you have these selected for this asset type, once you choose this type for a specific asset, all of this information is going to drive a lot of how the asset works. Flipping over to the General tab, we can see the revision rules. So if you change any information on the asset, if you add value to it, how is it going to revise for the future? Then you have depreciation rules. So this will be, for example, mid-month or pro rata. If we look in here by clicking edit, we can actually see there's an acquisition and a disposal option as well. And this will just be, for the most part, how are they going to do the depreciation for the first month. Depreciation period, you can either choose annual or monthly. Pretty much everyone will be using monthly. And then if you have specific custodians, you can choose them for, if you have a couple for this asset type. These are not mandatory fields. These are very important fields on the left, but the fields that are blank on the right, those aren't as important. Flipping over to the accounts subtab, we're actually going to see, okay, so what is the asset account that's going to be driving this? So this one basically says, okay, if we're choosing this furniture and fixtures fixed asset account, then we need to turn anything from there should go into this furniture and fixtures asset type. So for the most part, what you want is you want to see for each account, asset account that you have an option for, you want to see a different type. Now this is so that you're not having 2 types go into one account, where then it's a little bit more confusing as to, okay, when do I use this one versus when do I use that one? So usually we'd like to see for each account you have one asset type, or if you have one asset type that goes into 2 accounts, I guess you could have that. But for the most part, I mean, if they're going to be using the same asset type, you want those combined together. The depreciation account is where you're going to store the accumulated depreciation. So they've already created this and set this one up. And then the depreciation charge account is going to be where do you want to put the depreciation expense. So there's usually just a couple of those. The write-off, write-down, and disposal cost accounts, those are all generally about the same account. But this is basically exactly what they're saying. If you write off an asset, where do you put the loss in? If you write down an asset, where do you put the loss? And when you dispose of it, where do you put the gain or the loss, depending on whether you have one of those. So those are the key fields there on the asset type. So now we have to go look at the depreciation methods. So if I go back to fixed assets and setup, we can look at the different depreciation methods. This was preloaded by NetSuite, and this usually accounts for basically all of the types that a company could use. A lot of people like to use the straight line method just for simplicity, but if they want to choose a different method, there's a lot of different formulas in here for how long or which way to run the depreciation. It's nice that NetSuite has already preloaded this in there for us. So now we've got to go and look at an asset itself. So we go fixed assets, lists, and then assets. And this will show us everything that's available. Another thing, we could create a saved search off of this so that the customer, if they want to see different information, if they want to see it in a different format than this, we can easily do that. We've done that in the past. So we're going to choose the first asset, FAR number 1, and this one came over, and the name is reception light. That's the description of the asset as well. This one come over from a furniture and fixtures account. But the key information to look here is your original cost, which is going to be what the cost was to purchase it. Then our residual value percentage is going to drive our residual value, and because it's 0, we don't want to have any left over. As you can see, accounting method, asset lifetime, those all match up against the asset type that we just showed you. So it's straight line 60, monthly depreciation. So all of that information was driven by this furniture and fixtures asset type. Next, we want to look at over here, we have the current net book value and the cumulative depreciation. So these fields here are really tied to each other, and every time that the depreciation goes up, the net book value goes down, and these two combined should be our cost over here, the original cost. The asset status, you can either have new, depreciating, fully depreciated, or disposed. Those are kind of the options that you have for the asset status, and because it says it's depreciating, it'll continue going. Clicking over to the general tab, we can see the department, class, location, subsidiary. This all gets created when this asset gets created itself. The purchase date will be driven by the purchasing transaction. And then we can see we have a depreciation start date and a depreciation end date. The depreciation start date usually matches the purchase date. It could be changed by the customer if they would like, but usually these match up. And then the depreciation end date is going to be 60 months after the start date. And NetSuite's going to go ahead and calculate all of that out for us. Then we can see the last depreciation period was number 9. So there's been 9 depreciations so far for this asset. And the last depreciation amount was $5. And that's just our straight line method. $300 over 60 months is $5 a month. And then we can see 9 times 5 is our 45. So our cumulative depreciation is our total number of depreciated periods and the last depreciation amount. Then we got to look at our last depreciation date. So we depreciated November already. And then we have our depreciation rules. This came over from the asset type itself as well. So there's a lot of information on here that has been driven by the asset type. And then when we look at our accounts, this is going to be, again, driven solely based off of our asset type. So we have our furniture and fixtures. All of these accounts will be matched up exactly as the asset type. There's a few other subtabs in here in case, say a company had heavy machinery that they wanted to continue doing maintenance on. They could log all of that information here, where they can say, okay, what's our last inspection date? What's our next inspection date? And then you can create reports off of this to say, okay, we want to see what the next inspection date is, but we want to see that next inspection date when it's 2 weeks away, a month away, so we can kind of keep track of our maintenance. And so that's just a good way to have all of this information in here so that the company can really keep track of their fixed asset, because usually these are fairly expensive machines that they like to keep track of. They want to keep them working. We can click over here to the Depreciation History tab, and this will actually show us all of the transactions that have happened for this account. So here's the acquisition, 31 for $300. This is our purchase. There's no depreciation posting because it's not a depreciation. Yes, this is the actual acquisition. But every month after that, it'll show, okay, here's our March depreciation, $5. What's our net book value is $295. It'll also give you a link to the journal entry. So if we wanted to look, we can look into all of these journal entries and see, okay, let me take a look at this depreciation journal. And that's a nice thing where you can go back and you say, okay, this was depreciated in this month, and here's our depreciation journal. So you can have all that tied together. So that's kind of a framework of the asset and the fields there. We can actually do a CSV import of fixed assets. So say a customer is using a different fixed assets record keeper. Some people use Microsoft Excel, and that the file gets really big, and then they say, well, let's just start using it within NetSuite. So we can actually do a CSV import to get all these key fields into NetSuite. The really key fields that we'd like to see are the name. Over here on the general account, we want to see the department, class, location, subsidiary. Got to have all of that information. Usually a customer likes to break it down, break each asset down by department, class, location, just because it helps them for better accounting. Then we want an asset description. This is so what is this asset? Usually the name and the asset description can be different. Sometimes they're the same, sometimes they're different. The serial number, if there is one. The alternate asset number usually comes over from what their prior system was, or their line number in Excel. We can actually use this one as the external ID as well, because this should be a unique number from their prior system. Then we want to see what the asset type is. This will be very key. And then we want to have the original cost, the current net book value, and the cumulative depreciation, simply because those three fields here are going to drive a lot of the depreciation going forward, or all of the depreciation going forward. Then we also want to have the depreciation start and end date, because again, that drives all of the depreciation. We want to see what was the last depreciated period and how much was the last depreciated amount and what date it was. So once we have those three key fields, and then the purchase date, just for this is more of a data research field. But once we have all of those key fields, the asset type will drive the rest. And then because NetSuite will say, okay, we've depreciated 9 periods, it's going to start with depreciation period number 10. So that's why we want to have these key fields in there. And we just do a CSV import and we can load them up. We've done this for a couple customers now. So the next thing I want to show is the different transactions for fixed assets. So we go over here to fixed assets, transactions, and the first one is the asset proposal. So let's say we have a vendor bill comes in and we say, okay, this is going to go into our furniture fixtures account. Here's vendor invoice number 5101. It's already been proposed. I'll show you how to propose it in just a moment. But basically this vendor invoice, let me pull this one up, 5101. Just so we can see and compare to how the proposal comes in. So it's going to say here's our initial cost is $1,500. Depending on the asset type, it's going to have a different lifetime. So IT equipment has been set up to have a 36-month life, and then leasehold improvements has a 480-month life. So it looks like the invoice is loaded up, and here we have Dell laptop, which will drive into this IT account. And then the description here, Dell laptop for internal use, will come over here as the description. Asset type is IT equipment because that's how it was created from the proposal. And then the department, location, those are here. Here's our subsidiary, global agency. I don't see class on here right away, but they could have a class someplace in here. It could be on the item. as well. It could be this revenue type, could be the class, but that will actually be on the inside. So if we click edit on this proposal and let it load up, and again, here's the $1,500 amount, quantity of one, so we have one laptop coming in, $1,500. This one is $1,500 for one laptop. So we can see here, asset description, everything will come over. Let's say that this is a different type of IT equipment, that maybe it's a 4-year life. We can change this to 48. And this will be before we've actually created it. So just by creating and proposing this asset, all of this information gets generated both from the transaction and from the asset type. So a combination of the two of those drives all of this information. And yeah, so department, class, location, subsidiary, all of this gets populated based off of the transaction. The depreciation rules, so the custodian has been manually filled in. That comes from this purchase order. That purchase order drove this invoice. So we can see all this good information. We have our depreciation start date. We have our purchase date. All of this information is going to be super vital. Again, the accounts, they come over from our asset type. So if we change the asset type, all of that should change. But I like the way that this is looking. This looks to have the correct information set up. I'm going to go ahead and cancel this. I can close down that tab, and I can go back over here. Now, let's say I wanted to see what new items needed to come in. I can choose my asset type. So I'm going to choose furniture and fixtures, and then I'm going to choose my headquarters subsidiary, but I want to do all of them. So I'm going to click include children because that'll let me choose all of the subsidiaries, and we're just going to click propose new assets. And when that happens, it's going to bring us to this transaction page, and then NetSuite itself is going to run a few scripts, try to find any new transactions in any fixed asset account, and it'll propose those. So this takes just a couple minutes, and it's already done. Looks like there have been 32 assets that have been proposed. So here they are, 32 new assets. So we can go back and we view the proposal page, and just clicking on that link brings us right back to where we were. And now we can see that there's a lot more, or maybe not. Where did they did not show up. Maybe they didn't propose any new assets. Let me just refresh this and see if it comes up. It's probably choosing which subsidiary it is. So I'm going to go back to the global agency and refresh. Okay, so because I've chosen the global agency, it's going to show me which ones these are. But that's okay because I just wanted to do this first one anyway, 5101. So I'm going to choose this asset. I've already gone in and looked at it and said, okay, this looks good. Now I'm going to click Generate Assets up here at the top. And this is actually going to create the asset for me. So NetSuite itself is going to go ahead and start running, again, another couple scripts where it's going to feed in information and create this asset for me. And still loading. This could take a minute, but it'll let us know when it's done. So I'm going to go back over here to List and Assets. I'm going to rearrange it so that the highest number is first. It's already been completed now. So one asset has been generated. That looks to be this one here, 000274. Here's my $1,500 net book value, original cost. So now we can go ahead and view here. When we view this asset, everything should come up as we had it set up in our asset proposal. So here it is, laptop for internal use, IT equipment, $1,500. NetSuite has calculated these out because there's been no depreciation so far. You can check out the general information. We can see all of the information here that we want. Here's our purchase date, depreciation start and end dates, last depreciated. Lots of everything has come over just as we wanted it to. Here's our parent transaction, Invoice 5101. It's looking good. Just how we set it up. Accounts perfect. So now I want to show the asset transfer, and let's just take, for example, that maybe the department is wrong or the class is wrong. So we're going to go fixed assets and then transactions, and then we're going to go down here to asset transfer. And when we choose the asset transfer, we choose our new fixed asset. It's going to load up. All right, so all of this information up here is going to be how this asset is set up currently. So it's already set up for $1,500. Here's our asset lifetime. Here's our asset type, department class location. So when we're actually going through here, we can change, say, creative services. Well, that's just the general department. And really, it's our production services. So I'm going to choose this production services department. And as you can notice, now this asset type has gone gray. So I cannot change both a classification, so subsidiary department classification. I can't change it. I can change one of those four, or I can change just the asset type. I cannot change both at one time. It's too many different transactions that NetSuite would have to account for. So if you need to change both of those, you would change one first, and then you could change the other one. So I just want to change this one into production services, creative services. This will be, let's call it design services. Design services, and location is the LA office. That's fine. So we can go ahead and click process transfer here, and then NetSuite's going to take us through a new transaction page. So it's going to go ahead and create a journal entry for us. In progress still. And NetSuite has scripts that run run in the background and do all of this for us. That's why we can just click it, change a few tabs, and then NetSuite will know what to do, know where to put them, what fields to change. And here we go. One asset has been transferred. Now, if we look at our asset again, and I go to my general, now we can see creative services, production services, design services for the class. So these have already been switched over. If we look at our depreciation history, they went ahead and moved it around. So that's what these transactions here are for. It's actually the movement of the fixed asset. So that's fine. So we're looking for journal 847. We can pull this one up. And we can see, okay, it went in and out of here. It went out of creative services. It went back into production services, design services. So this is just simply moving it around within the same account, just changing the classifications on it. And this is so that our GL information is going to match up against our subledger information. It's key for the accountants. That's what they like to see. Now I want to depreciate the assets. So I'm going to go fixed assets, transactions, asset depreciation. And I want to choose my furniture and fixtures. And let's go ahead and just choose all of them, all of our subsidiaries. We're going to depreciate for November 30th. Actually, let's go December 31st. And this will be our depreciation memo. So and then I can click depreciate. If I wanted to, I could click all of them, but I just want to do furniture and fixtures on its own. So I choose all of this information, click depreciate, and now it should run through, and it's going to take, it'll take a little while to go ahead and run this depreciation. Depreciation period, date cannot be a future period. All right, so I guess I will have to choose November 30th. Must be a function within NetSuite, so I can't depreciate too far in the future. So I'll rerun November then. I'm going to guess that there's not going to be anything in here. I should have chosen IT, simply because I know that we have a new asset in there that needs to be depreciated for November itself. So I'm going to go back in. While this is running, I'm going to run a different depreciation. IT equipment. Just going to choose global agency. I'm going to say Delta depreciation because I know that's one of them that's in there. And I'm going to click depreciation, depreciate assets. Right here. So it's going to go ahead and process this. Again, it's going to take a while. So while it does this, I'm going to show the disposals screen. So I'm going to go fixed assets, transactions, disposal. Open this up in a new tab. So when we're on this disposal page, we can actually choose what the disposal type is, either a sale or a write-off. Then we can choose what date we're going to dispose. So I'm going to choose write-off, and then disposal date 3/11/2017. And then here we can choose what asset we have. So we can choose just the very first one. And then this information is going to pop up. This will be based on the asset. And then we can choose how much we're going to dispose. If I'd chosen sale, we can choose a sale amount. Again, if I'd chosen sale, we can then choose what customer we're selling it to, what the sales tax should be. So all of this information, we can do this through a CSV import as well. This, if we click here, it'll give us the import template. So if we're depreciating multiple and it would just be easier to do an import, we can do it this way. But if we're just doing one, we just add here. It doesn't like that I've chosen a day before the last depreciation date. I'm going to choose just 12/1. And now we have this one. We can click dispose and it'll dispose of this and put everything into the correct accounts. Let's go back and look at our depreciation. Looks like the queue is going down. It's doing all its processing. So that's what the information that we need to know for the disposal of assets. We can create reports here that NetSuite has previously set up. We can choose register summary, detailed register, the net book value schedules, period depreciation schedules. We just need to choose what the start and end date of this report would be, how we're going to choose it, subsidiary, all of this information. If we leave it all blank and we just choose the report, it should pull up all of these. So that's just something that NetSuite has built in the back end. It'll allow you to pull up a PDF version of this once it's done. So it's checking through our compound assets, depreciation method. I'm just going to open up this asset here that we are looking to depreciate. So it hasn't gone yet. Here's our asset status of new because it hasn't started depreciating yet. Once this is finished, this will update and this will show as depreciating. So that's it for the asset demo. This one's going to take a little while, so I'm going to cut it off here. But it's going to process, so it's going to be 1/36 will be here in our cumulative depreciation. Our general information, we're going to have last depreciation period is going to be 1. Depreciation amount, because we're going pro rata, so it's not actually going to be 1/36. It's going to be 136 divided by however many days are left in this month. So that's going to be our depreciation amount. Depreciation date is going to be November 30th, and we're just going to have all this information get updated. So I'm going to close it off here while this process is in the background. Try to refresh, see if that worked. Oh, here it comes. 3194 is already done. As we can see, now it's depreciating. And just as I said it would, here's a last depreciation date is 11/30, depreciation amount 3194, which is our cumulative depreciation. So next we went ahead and updated all of this information. There's going to be a journal entry for us. Let's look at the depreciation history. Hasn't created the depreciation journal yet. That's going to be right here. Oh, now it's done. Let's go ahead and refresh and come back to the depreciation history. Depreciation journal 849. So if we go ahead and take a look at this guy. Here it is. Looks like it's already been approved, probably because I'm in an admin role. But we can see what all of the accounts we're going into out of. Here, these last two lines here are for our fixed asset. And we can see because it has this production services and design services. So put into our depreciation expense and our accumulated depreciation account for IT. So everything is looking good here, and it has done it successfully. If there's any more questions, I mean, there's a lot in this one, and there's a lot to the fixed assets setup. There's a lot to fixed assets itself. Feel free to ask any questions if you have any.